Everyone is bullish. Everyone thinks Nifty will only go up. But I say different. When the markets are loud, I listen carefully. When the markets are quiet, I listen even more carefully. Right now, Nifty look strong on the surface, but the strength is not what I am interested. I am interested in the behavior. And the behavior right now suggests that the market may be preparing for something different, possibly a move towards 22,000 over the next few months. There are seven technical indications that are indicating market will fall in the upcoming months. Let us discuss those seven technical indications. So the first indication is strong rejection from 26,300 resistance level. Okay, on 23rd September 2024, market reached 26,280 and formed all-time high. From this point, market fell around 4,500, that is 17%, making this good resistance level. After more than a 1 year, now the Nifty reached this 26,300 level and took a good rejection with a great strength candle. It took rejection and formed a pause candle here. Now it's continuing to fall down. So this is a good resistance zone and market taking resistance from this zone. So that means the sellers are very interested to take the market down further. So why I am telling the market will reach 22,000, because from this I formed this low. Again this low tried to break this high but it failed. So I am expecting the market to test this low because this is a good demand zone. That's why I'm expecting to market to reach 22,000. This is the first point, first indication that market will reach 22,000. The second indication is breakout failure near all-time high. You can see 26,280 is all-time high and also a great resistance level. Nifty came to this resistance level and it actually broke this resistance level. You can see this is the first time it broke the resistance level, but it did not sustain. It came back again. It broke the good resistance level, all-time high. It did not sustain. It came back. It came down again. So this actually considered as a breakout failure. When the breakout failure happens, the market will fall very quickly. You can see here, that's why the market fall very quickly and it will fall heavy. When a breakout failure happens, market will fall heavy always. So I am expecting market to fall furthermore up to 22,000, because 22,000 is a good support level. The market come to this 22,000 to retest this support zone. So this is the second indication that market will came to 22,000, that is breakout failure of 26,300 resistance level. So the third indication is current market price is far away from 200 EMA. Okay, 200 EMA, this is that this blue line is a 200 EMA. 200 EMA is a key technical indicator, shows an asset long-term trend, and it also acts as a dynamic support or resistance. If the current price of a market is above this 200 EMA, then the market is in uptrend. If the market price is below this 200 EMA, then it is in a downtrend. Here in the Nifty, it is in the uptrend because the price is above the 200 EMA. But the problem is this market current price is far away from 200 EMA. That means the market is overstretched. So there is a reversal pending in the upcoming days, because the way healthy market works is different from unhealthy market. The healthy market contains pullbacks, consolidation, again bull run. But in terms of 200 EMA, the healthy market should came back to its mean value, that is 200 EMA, and again it should go up. Here, when we see the history in the Nifty 50, you can see. Wait a minute. When I come to monthly, sorry, and weekly. Okay, if I come to weekly, you can see here in 2004 it took the support from the 200 EMA and went up. and again it came back in 2008. That is, it took 4 years to came to its mean position. And again in 2009 it went up to 2010, and it came back in 2011. It took 2 years. From this, it from 2012 to 2015 it went upside, that is bull run. It took 3 years to went up, and it came back to its mean position in 2016. So 16 to 19 and 16 to 20 it came back to its mean position in 20. That it took 4 years. But in from 2020 to 25, the Nifty did not came down, and it not touched this 200 EMA. That means history shows that the Nifty will came back to its mean value in every 3 and 4 years. But it's been 5 years. Our Nifty 5 years now, the Nifty had not came back to its mean value. So I am expecting this year it will come to its mean value. Because of this, the market is showing several signs of reversal, as I will mention in this video. So this is the third indications that the market is far away from 200 EMA. The fourth indication is market taking rejection from the upper Bollinger Band. So this is the Nifty 50 chart in monthly time frame. Okay. So Bollinger Band is a technical analysis tool which can be used to identify the trend strength and reversal. If the price touches the upper band, suggests that asset is overbought. If it touches the lower band, it suggests it is oversold. So we can expect the reverse from the upper band and also from the lower band. So when the market takes the rejection from the upper Bollinger Band, it generally means that the buying momentum is slowing down, and this asset is considered as a overbought. So in technical analysis, this Bollinger Band act as a dynamic resistance and also a support. Here you can see in Nifty, I can show the history. Whenever it hit the upper band, it took the rejection and came to the lower band. You can see here in 2007, it came back to its lower band. It hit the upper band and came back to its lower band. Upper band came back to its lower band. In 2020, it hit the upper band, take the rejection, and came back to lower band. From 2020, it never came back to its lower band. It always stayed up on the higher band. So this year in 2026, I am expecting the market to came back to its lower band because it taking a good rejection from its upper band. So you can see this lower band is also near the 22,000. As I told earlier in this video, every indication is showing me that 22,000 is a good target if the market take a good rejection from here. So this is the fourth indication that the market will come to 22,000 in the coming months. And the fifth indication is the market formed M pattern near all-time high. So the M pattern is a famous bearish reversal pattern. It is used widely all over the world. Here you can see in Nifty, the market is forming M pattern at a very good resistance level. As I mentioned early in this video, this is a very good resistance level, but the market is forming a M pattern. M pattern means reversal pattern, trend reversal pattern. So here you can see the market formed a high here. It came down, formed the neckline, again went up and came back again, and it broke the neckline, and it is continuing to fall down. So this is the great indication that the reversal is coming in a few months. So I am expecting this reversal to came up to 22,000. That's it. This is the another indication that market is going to come down in this year, in next within months. So this is the fifth indication. So the sixth indication is no red candle from past 10 years. No, okay, you can see if we came to this 12 months time frame for Nifty 50. This is a 12-month time frame. That means a single candle contains the data of 12 months. If you see this from 2016, from past 2016, if we consider this is the small red candle, it is a doji candle, it is not even a red candle, it formed a small doji candle. Let it be, if we consider it as a red candle from 2016, the market went up and formed green candle every year. What is the healthy market do is it forms two to four or five red green candle, and it form a two red candle, and again it will continue forming a green candle. That is the structure of the market. That means the market should go up and it should came back and it will go up like this. Here you can see it came back, but it not formed even a single red candle. So from past 10 years, it in Nifty 50 had not formed a single red candle. It is not closed even a single red candle. So this year 2016, sorry, 2026, I am expecting a good red candle to form here. If it should form red candle if the market is healthy. So this is the sixth indication that market will came to 22,000. And the seventh indication is geopolitical fear, that is wars, tariffs, etc. This is geopolitical fear. This is the last indication. Geopolitical fear is a fundamental factor that affects the stock markets. Now there are wars going in the world. There is a fear, and there is a rumor that third world war will going to happen. Let it be. But this type of news, that's the wars is going to happen, and also the Trump is putting a tariff on every country, especially India. These news can affect the stock market. They can change the trend. So this year also some analysts they are saying this 2026 is a bearish year, that will the every market in all our world, they will close in the red. This year there is going to be a market crash. So these factors also include to Indian market also. So this is also an indication that the market will going to crash this year. So you can see from all seven indication I told, they align each other. Every indication I told from the 1 to 7, they align each other. So that's why there is a probability of the market, Indian market, going to take a pullback or going to consolidate. I'm not going to tell that full the market will crash to 20-30%. I'm telling to minimum 15%, that is from this to this point, that is 15%, up to 22,000 it will going to come to 22,000. So plan yourself, that is from this point to 22,000 is more than 3,000 4,000 points. That means we can capture that points if we plan cleverly. So I'm not telling it will going to come 100%. I'm telling there's a probability, more probability that the market will going to come 22,000 in next 5 to 6 months. So I took some position targeting 22,000. I will show here. You can see I took 24,000 PE, that is 30th July, 30th July, that is July. July is in next 5 months. So I took 30th July to the 24,000 PE, expecting market will go 22,000 up to 24,000. Why I took 24,000 PE? Because when the market if the market came to 22,000, my 24,000 put will be in the money put. So that will give a good profit for me. I took this trade on 16 January 2026. Only a single lot, it took I invested around 8,000. If the market came to 22,000 as I expected, this will give lakhs in profit. That I invested 8,000, it will give up to 3,000 to 4,000% returns. So I am hoping the market will come to 22,000 according to my analysis. So these are the indication that indicating the market will come down. So please plan your trade according to your risk management. I'm just telling my analysis here. So if you like this video, please like this channel and subscribe this channel. Thank you.